Hello everyone, how are you all? Today I am so happy that I am starting a new series on controlling, and I am going to cover all the submodules in controlling from cost center accounting to COPA, and whatever I understood I am going to explain you in these videos. Thank you so much for watching, and also I am so happy that I am part of this journey. Like at least I am helpful to few of the people in the society by providing my SAP knowledge. Thank you so much for all the people who are watching my videos, and I hope at least you are gaining some knowledge from my videos. So let us start our today's video on controlling basics. So in this controlling basics, we are going to learn like distinguish between external statutory accounting and internal management accounting, manage organizational units in CO, configure the operating concern, configure the controlling area, configure CO versions, understand the concept of cost objects, identify integration points between CO and other SAP business process. So, creating the organizational structure is the initial step in defining overhead cost controlling, otherwise known as CO. So, for each and every implementation or for each and every module, before implementing SAP in any of the organization, the first step we implement is the organizational structure. In the same way, to implement controlling in an organization, the first initial step is we need to define the organizational structure, which is known as overhead cost controlling. So, how we define that overhead cost controlling? And the organizational structure for controlling is at the highest level there will be the client, operating concern, and the controlling area. Under controlling area there will be multiple company codes assigned to that. Under operating concern there will be multiple controlling areas. So normally any company will try to configure only one controlling area, but as per the requirements or as per the necessity of the client, they can create the controlling areas. So our task as a CO consultant is to capture customers' internal cost reporting requirements and recommend the appropriate CO configuration. So before making recommendations about CO organizational units, we need to become familiar with the components of CO so we can design the organizational units appropriately. So first we need to understand what are all the components exists in controlling. So the primary integration part with CO is financial accounting. When you define the CO organizational structure, it is linked directly to the FI organizational structure. The interaction between the FI and CO will depend on the controlling area definition. So FI data and CO update the same major table for reporting in SAP S/4HANA. This integration requires you to have a broad understanding of FI processes that will trigger CO postings as well as CO postings that don't impact FI reporting. So basically, before implementing the CO in an organization, we need to understand the components of the control components in the controlling area, and also need to understand the uh, internal cost reporting requirements of the company, and based on that we need to create the organizational structure for the organization. In addition, CO is closely integrated with other lines of business. The organizational structure in other lines of business will link to the controlling area through the FI organizational structure. Configuration in these line of business areas will impact your configuration and could adversely affect the CO area. As a CO consultant, the broader your understanding of standard SAP processes, the more successfully you will define CO structures. So we need to have an idea of all the business processes. Like if we do the cost center planning, if we run a transaction code, so how it gets affected or how it will updates the data in the system. We need to understand each and every point. So I will share the knowledge which I have about these business processes whenever required, whenever we are discussing about the transactions. The total areas you need to consider depend on the SAP components you are implementing for your customers. Likely, consultants in other line of business will not be aware of how they adversely affect your work. Thus, you will need to translate your requirements and record interactions so that configuration settings do not conflict. So once we understand the requirements and the components which are to be activated, we start our configuration process. Like defining controlling areas and activate the CO components, define operating concern for profitability analysis, define CO versions, configure the assignment of interrelated organizational structures. So these are the few things which we start with the implementation. Every SAP system has two main areas, the application area and the configuration or implementation guide. So in this controlling basics chapter, we will discuss the enterprise structure of an SAP system which is defined in the IMG. So sorry, it is not a TMG, that is an IMG. We will show you how to define organizational units relevant to CO and describe how other business processes interact with CO. So define organizational structures is the first step you will perform in configuration. You also will learn how the features of CO are impacted by organizational structure. We will discuss how the organizational structures are built through assignments. In addition, we will illustrate how organizational assignments interact with each other to provide business process integrations. So overall, we will understand all the different organizational structures and how we need to configure and how these are integrated with different organizational structures or organizational units within the organization and provide business process integrations. So now let us start with an introduction to configuration tasks. At a high level, most configuration falls into three main steps. First, you will define a structure, which means giving components in your structure names. Then the structure needs to be maintained with the required technical settings. Finally, any interrelationships with other structures need to be assigned. These assignment will support integration across the system. So first we will define the names, like what should be the name for the controlling area, and in the second step we will define the technical settings required in that controlling area, or I'm just talking about controlling area, and the same thing follows for each and every organizational unit which is part of organizational structure. Finally, we um, we create the interrelationships with other structures which are which is which need to be assigned for integration purpose across the system. So from this slide we will understand the positioning management accounting. So to begin any discussion of overhead controlling, we must first understand its position in relation to FI, which is legally required for any ongoing business venture. So FI is the part which is actually legally required for any kind of organization, and CO is a part where we generate the reports for internal reporting purpose. So FI provides a standardized reporting structure and maintains the details needed to meet statutory requirements. FI is designed to adhere to standard accounting practices and legally mandated details. The general ledger, which is fully integrated with all other operational functions, records all value related details to meet these reporting requirements. So actually the general ledger is mainly used for reporting the legal requirements. A fundamental challenge exists with FI. While FI can meet all external reporting requirements, it lacks the detail required to meet internal business reporting needs. So it gives the information at the high level, but if we want to capture the information in detail, which helps for the internal reporting purpose or which helps for the high level management to take the decisions, then we need to capture the information at internal operations level. So often financial information is recorded at a higher level of detail. CO contains the functions necessary to report enhanced detail for internal operations. So CO is the one which helps in providing all the details for internal operations. So that is the purpose we actually require the controlling module. Why we need to implement the controlling module. So note that not all postings for financial reporting will flow to the CO. Instead, CO monitors and tracks operational functions. In other words, CO tracks designated expense and revenue postings from FI. So mainly the CO module takes the information of only related to expense and revenue. So the main motto of controlling module is to track the profitability, or how much is the sales, so how much is the expenses and how much is the income, where we have to improve in our organization, like reducing the sales, or where we have to improve in our organizations by reducing the expenses. So as well as cost and revenue details from other line of businesses. So this is the purpose, general purpose of controlling. CO excludes all financial postings to the balance sheet. It doesn't require like how much assets are there. That is the purpose of FI. So that will take care of all the things. The main thing of controlling is like to show what are all the expenses and what are all the revenues, and we can analyze all the amounts related to expenses and decide whether the amount of expenses which are which we are spending is up to the mark, or we are spending more than required. So this is what we need to analyze the expenses and revenues report. So as per the revenues, we can see the revenue from different business areas or different areas where we are getting huge revenues. We can analyze what is the reason. Is the same thing, can we implement the same thing even in other areas to increase our revenue? So now we start discussing on organizational units for controlling. A critical first step to implementing an SAP system is to design its organizational structure. This design will translate a real life company or business model into the SAP's organization's structure. This structure will significantly impact how an SAP system operates. Each level of the organizational hierarchy identifies individual units related to the business. The controlling area level could have one or many individual controlling area units depending on business needs. The levels of the organizational hierarchy may have direct or indirect links to units at other levels of the hierarchy. You can also create specific guidelines on how organizational units at each level are associated to the next level. The organizational level connections provide the basis for SAP business process integration while providing the foundation for the reporting and analysis of business functions. The first organizational unit which we are going to discuss is the client. The client is the top organizational level of any SAP system. The client is a complete set of self-contained master data, applications and tables. A client will contain a set of ABAP programs, master data tables, transactional tables, configuration tables, and the data dictionary. In the SAP table structure, some tables will be identified as client specific, meaning unique to this client, while other tables will be designated as cross client, meaning common to several client structures. The client overview, and we can see the client overview and client detailed screen in the figure given. So the client, and here there is a currency which is a global currency for this client. So what are all the company codes created under in this client will have the global currency of EUR. So in the standard SAP installation, you will work with at least 3 separate clients. One client will represent production or the business concern. The production client is critical to operations and must be stable and accurate. To fulfill this requirement, 2 additional clients will be used. One client will be identified as a development client. In this client, changes or technical updates to the system are implemented and tested. Once these changes have been validated, they are transferred by means of a transport or table copy from dev to a third client called quality client. In the quality client, your business analyst can test and validate these changes. If any issues or concerns arise, additional changes are made in the development client and transport again to the quality client. So in this figure we can see like which explains the client 400. So changes and transports for client specific objects, auto recording of changes, and changes to repository and cross client customizing allowed. And there are few basic selections which we do on this client screen. So once the relevant business unit signs off on a change, the change is transported to production. This process reduces risks by avoiding reckless changes to the production client. While each client may have a complete set of data and tables, dev and quality may not exactly match the production system. These other clients may only contain a subset of the production client. Unless a backup for the production client, not all clients need to have all the production master data. A development client, for example, may have test data created for the express purpose of testing system changes. Trying to keep data synchronized across all clients can be quite cumbersome, but can be facilitated by a system installation architecture like the one shown. So if we see in the figure, we can see the client, the system which has like organizational element, master data, transaction, and customization or configuration, program, security, and we have company, IT installation, production client, quality client, and development client. So even the production client is integrated with third-party systems, non-SAP systems, and we also have individual clients like training client, sandbox client, and SAP reference. So which helps all this sandbox client, training client. In sandbox client, even before implementing the changes in SAP, we can test the new changes in sandbox and analyze the result whether it is working as expected from the business, and then we can move on to do the changes in the development client. The same thing for training. In training client, the new users can be given access to that client and they can use it for their training purpose. Normally the data available in the system is configured based on the SAP courses, so they can easily learn with the data available in the system. So now we are going to discuss about operating concern. So an operating concern is the first level of the CO organizational structure residing directly below the client. An operating concern represents a view of external market segments for the enterprise and is necessary to activate COPA. COPA has two options: account based COPA and costing based COPA. Whether you use account based COPA or costing based COPA or both, these activities take place on the operating concern level. To begin the configuration of the operating concern, you will give it a name and an ID. The identification for each operating concern is a 4-character alphanumeric code. The naming conventions for the operating concerns are shown. You can see, you can name the operating concern as shown on the figure. So once we have created the operating concern code, you can maintain its initial settings as shown. In this step, we will determine whether account based COPA or costing based COPA or both are activated. You will need to define the currency to be used in the operating concern as well as the fiscal year variant. Each SAP transaction is recorded with a period designation. These periods are defined in the fiscal year variant. This fiscal year variant must match the assigned controlling areas. To maintain data consistency, the periods must be equivalent between the operating concern and the controlling area, even though the currency may be different. If costing based COPA is activated, you can assign a second currency. After the operating concern has been activated, you can assign the relevant controlling areas, which we will discuss in next section. The assignment between controlling areas and operating concern can have 1:1 relationship or n:1 relationship. That means many controlling areas can be assigned to one operating concern. There is a note which we need to remember. In an SAP S4 HANA system, you can still activate accounting based COPA. However, activate costing based COPA. However, account based COPA has been enhanced in SAP S4 HANA with many of the features of costing based COPA. You will need to consider whether costing based COPA is needed. Now we are going to discuss the next organizational unit, which is controlling area. Internal business transactions are captured in the controlling area, which is the key organizational unit in CO. Internal allocation transactions are captured on cost objects. The level of detail provided by CO components allow specific cost monitoring and process flow. Primary costs are revenue and expense accounts that are transferred from external accounting. Overhead costs can be captured and then further allocated with secondary costs. You can allocate costs only within a controlling area. Cost objects refer to only one controlling area. So now we define the controlling area. To initiate the controlling area, you will need to name it and assign a code. The naming convention for the controlling area is like the operating concern, a 4-character alphanumeric code as shown in figure. Even though the controlling area is a separate organizational element, you will see that controlling areas are closely tied to FI settings. Once the name is active, basic settings for the controlling area will need to be defined. Basic settings. The initial configuration settings shown in figure include currency details. The first setting, the company code to controlling area drop-down list, affects currency. And your choice depends on whether you will later assign one company code or many company codes to your controlling area. Even though you may only have one company code right now, choosing the cross company code cost accounting option would allow more company codes to be added in the future. Be cautious with these settings. Some settings, especially those related to currency, cannot be changed later. Next, choose a currency type setting which will determine the default currency for the controlling area. You can choose a unique CO currency or use one of the FI currencies. The usual choice is 30 group currency, which is a currency in FI. Selecting the different company code currency setting will activate a second CO currency, thus allowing local company code currency evaluations. Once the currency has been determined, the operating chart of accounts is identified. A fiscal year variant must be defined for the controlling area postings. The fiscal year variant will automatically generate posting periods in all CO transactions. An additional setting in cost center standard hierarchy field is updated. Cost centers must be assigned to standard hierarchy. The standard hierarchy is a mandatory field and only one standard hierarchy can be defined per controlling area. The controlling area settings as well as the standard hierarchy are shown in figure. So by seeing this figure, we can see how we are going to activate the components for the controlling area. This configuration phase will manage overhead controlling options that are available in the controlling area. In this step, you will need to have an in-depth conversation with your customer to determine their requirements. You will activate components in the controlling area as shown in the figure, but these components will require additional configuration to complete their functionality. We all know that we, we need to assign the company code to the controlling area. And as we know, there is a one-to-one relationship between the controlling area and company code, and also multiple company codes can be assigned to a single controlling area. And in SAP S4 HANA, there are no CO cost elements. Those were replaced with GL accounts and are controlled through GL closing variant. However, this feature introduced a constraint on the CO closing process. To implement the controlling area close at special periods, commonality was added for SAP S4HANA. Now we discuss about controlling version. A key function of CO is its ability to record different versions of your data for comparative analysis. With the introduction of versions, you can differentiate between plan and actual data. The term actual refers to the value of a business transaction that has occurred during the reporting need. The term plan refers an estimate of future transactional values by period. Many individuals in the business community refers to the plan as the annual budget. SAP reserves the term budget to represent funding for a project. So here we have one tip related to the version. Versions are a valuable element in CO. In a controlling area, you can define many different versions. Actual data can only exist in one version. Version 0 is always assigned as actual. Plan data can exist in many different versions. Defining separate plan versions allows you to record data with different assumptions in different versions, which enables you to compare the results of different assumptions. So, from this, we understood that actual data will be recorded in only one version and plan data can be defined in many different versions. And we can compare those things whether the actual is recorded as per the planned data. If there is huge deviation between plan and actual, then we can check what is the reason why there is a huge difference between these versions. Now we talk about how CO versions are defined. If we see here, there is a version and the name of the version and whether it is a plan, actual, work in progress, variance. So whatever we use this version for, we will check all the checkboxes. Versions are first defined with ID and name as shown in the figure. We must also specify which data can be recorded in the version by selecting the relevant checkboxes. So now we discuss how we activate fiscal year versions. So in the same screen, we can see settings, controlling area settings. In that, settings for each fiscal year. So for each and every fiscal year, we will activate the version. Once that particular fiscal year is closed, we will log the version. Once the version is defined, you will need to activate it for each fiscal year as shown in figure. Fiscal years can be activated in advance. Plan or actual data cannot be recorded in the controlling area until versions have been activated. So now CO version fiscal year settings. So if we double click on that particular year, we can see the planning tab. Under planning tab, we can see general indicators like version lock, integrated planning and copying allowed, and the exchange rate type, and orders or projects, integrated planning with cost centers or business processes, version for actual allocation 0. So profitability analysis, receiver version is 0. So if we see here, each fiscal year that is activated will require additional settings to determine how the version will operate. Figure shows the following option. Select the version locked checkbox to prevent postings to unused versions. Integrated planning allows for the transfer of cost center planning data to different CO components. Integrated planning allows for the transfer of cost center planning data to different CO components. Select the copying allowed checkbox to permit plan data or actual data to be copied to a different version. SAP records data in multiple currencies. SAP records data in multiple currencies. Currency translation dictates what rate will be used to translate between currencies for reporting. The order or projects options control whether internal work or work breakdown structure element planning in a version is integrated with cost center or business process planning. So here in the orders or project, if we select this checkbox, it will control whether the internal order or WBS element planning in a version is integrated with cost center or business process planning. So if we want to integrate, we need to check this box. The profitability analysis section sets the version capable of transfer to COPA. So these are all the few things which we select in the fiscal year version option. So there is one more tab in this fiscal year version. So it is price calculation. The settings under the price calculation tab determine how the system automatically calculates prices and where the results will be stored as shown in the figure. So for planning it use periodic price, and for actuals again it use the same periodic price, and revaluation own business transaction, and profitability analysis it will do the procedure type is overhead costs. Cost component structure is Y2. So in this slide we will see what actually the profit center is. Although the profit center is a master data element, this object can act like other organizational structures. Profit centers are maintained in the application area rather than in configuration as with other organizational units. Profit centers are defined at controlling area level, which allows profit centers to provide operational reporting across all company codes assigned to the controlling area. Profit centers allow for a flexible internal organizational design separate from the rigid company code structure of legal entities. A profit center could represent a geographic region, a division, or a combination of these levels. So as a note, we should remember profit centers allow you to determine profit and loss, as well as capital balance sheet reporting by internally defined areas of responsibility. One significant difference between profit centers and other CO elements is the existence of balance sheet at the profit center level. So there will be we can generate balance sheet at profit center level. So it is more than the master data element. It acts like an organizational structure where we can use the profit center to generate the balance sheet report. Components of management accounting. So the components of CO are not explicitly part of overhead cost controlling's organizational structure, but a basic understanding of these components is needed to gain a foundation in CO. So each component of CO provides specific details for process analysis. The appropriate components are activated in the controlling area configuration and will be based on the business process requirements identified during the SAP project implementation. The appropriate components are activated in the controlling area configuration and will be based on the business process requirements identified during the SAP project implementation. So let us learn the different components available in controlling. The first one is cost and revenue element accounting. So the cost element accounting classifies costs and revenues by account number. This component provides details to reconcile FI and CO and includes account level value postings at a cost object level. So this component provides details to reconcile FI and CO and includes account level value postings at a cost object level. Two types of cost elements exist: primary cost elements, secondary cost element. Overhead cost accounting. Cost centers, internal orders, and business processes provide generic overhead cost tracking. Cost centers and business processes can enable broad cost analysis by department or process. Internal orders provide more encapsulated cost tracking. Overhead cost accounting typically tracks costs that cannot be directly assigned to products or services. During period end processing, these costs can be assigned to products and services through CO allocation tools. Overhead cost controlling tools include the following: cost center accounting, internal orders, and activity based costing. All these will comes under overhead cost accounting. So in this they will capture all the costs into single account, and at the month end they will distribute the costs to the specific departments. In this slide we will see the product cost controlling and profitability and sales accounting. So in product cost controlling, it provides cost planning details for products and services. This component accesses data from other SAP components. Product information can be used for tracking and analyzing operations. Cost object controlling uses production cost objects to monitor and track operations. The features of product cost controlling are: product cost planning, cost object controlling, material ledger or actual costing. So in profitability and sales accounting enable an enterprise level view of operations, and profitability can be used to determine actual business profit and loss. Enable an enterprise level view of operations, and profitability can be used to determine actual business profit and loss. COPA delivers an external market view of product profitability. COPA delivers an external market view of product profitability. Profit centers provide an internal view of a company financial fitness by individual profit centers or by groups of profit centers. Two components exist in profitability and sales accounting. One is profitability analysis which is COPA, and profit center accounting. So profitability and sales accounting enables an enterprise level view of operations, and profitability can be used to determine actual business profit and loss. Now we will check what are the cost objects. Any discussion about CO must include a basic understanding of cost objects. CO is predominantly organized by account number, which must always contain a cost object. A cost object is a cost collector. Think of a cost object as a bucket or container for a specific type of cost or revenue. Each cost object has specific features and functions. Many cost objects are associated directly to other line of business. Therefore, many cost objects are only valid if specific business process have been activated. Possible cost objects by area include the following: overhead management, which has cost centers internal orders, activity based costing business processes, and in product cost controlling they'll have production planning. In production planning they will use the cost objects of production orders, process orders, product cost, collectors. And in project systems, work breakdown structure WBS, and network and activities, and few more. Let us see that in the next slide. So enterprise assets management, and this it is integrated with the cost objects are plant maintenance order, custom service order. In sales and distribution, the cost object is sales order item. In profitability and sales accounting, profitability analysis, profitability segment, profit center accounting, profit center, these are all the cost objects in CO. So now let us see how it is integrated with other processes. SAP system has additional organizational structures for other business processes. The CO organizational structure links either directly or indirectly to other organizational structures to form the foundation for process integration throughout the SAP system. This figure shows how organizational units can be connected, which we will discuss further in the following sections. So if we see, every organizational unit in SAP is integrated with other organizational unit. So this is how the data flows from one organizational unit to other, and as a result we can see the final balance sheet report. Here we can see the clear picture of this organizational structure. If we see, It starts with, if we see the company code, and company code is again assigned to controlling area. Controlling area is the operating concern. Operating concern is the topmost. Then account based and costing based profitability, financial management area, and again it is linked to controlling area. Valuation levels, plant, purchasing organizations, sales organizations, and everything is interlinked to company code. So now let us see few organizational units from finance. FI records value transactions to determine the legal monetary position of your company. FI is based on legal requirements as defined by accepted accounting standards or local statutory obligations. Data in FI is defined in two views, the balance sheet and the income statement. The balance sheet represents the current overall health and stability of the company and includes assets, liabilities, and equity. The income statement is a view of all activity that has occurred during the period and includes the revenue received during the period and expenses paid out during the period. Company codes. A company code represents an independent accounting unit, also referred to as a legal entity. Company code represents an independent accounting unit, also referred to as a legal entity. Company codes track all value postings across an SAP system. Financial statements and profit and loss statements are prepared at the company code level to meet legal reporting requirements. Company codes are the central organizational units of external accounting structures that follow legal guidelines and accepted accounting principles. Company codes track all value postings across an SAP system. Financial statements and profit and loss statements are prepared at the company code level to meet legal reporting requirements. Company code are the current organizational units of external accounting structures that follow legal guidelines and accepted accounting principles. Few more organizational units in finance area are segments, functional areas, and business areas. So segment is a sub area of a company. Originally segments were added to meet accounting principles requiring a dimension of reporting for external market level financial statements. A segment can represent an area of business or a geographical region. In most cases, the segment is derived through a profit center assignment. The profit center is highly integrated with other business processes and provides a basis for deriving segments. Functional areas. A functional area provides the basis for cost of sales accounting and groups expenses by business functions. A functional area provides the basis for cost of sales accounting and groups expenses by business functions. Functional areas are assigned to the master data to link the functional area to business transactions. Thus allowing reporting by account number and business function. So financial reports can then categorize expenses into groups such as sales, administration, production, marketing, and so on. Business areas. A business area is an external accounting unit that corresponds to a specific area of responsibility in a company. Value transactions in FI are assigned to a business area. Business area can be used to create complete financial statements for internal purposes. Business areas are similar to profit centers, however, profit centers provide additional levels of flexibility. So now we see the organizational units related to logistics. Logistics includes all the functions to manage product and service activities that have occurred over a period. Logistics manages the procurement of goods and services at specific quantity and value levels. Logistics includes supply chain planning processes, production planning, and resource management. Logistics also include materials management with quantity tracking, position reporting, movement tracking, and inventory management. The sales and distribution function monitors the sale and shipment of products and services. Additionally, this component plans and monitors transportation functions. Key organizational includes the following. Purchasing organization. A purchasing organization negotiates the terms and conditions for procuring goods and services. Purchasing organizations must be directly or indirectly linked to company codes. This organizational unit supports the management of accounts payable transactions in the procure to pay P2P process. At the transaction level, the procurement of non stock materials or services will require purchase order items to link cost objects to track the expense transaction. Purchases of stock items will be managed in FI through the balance sheet. These transactions will receive their account assignment through automatic account determination. Automatic account determination is a technical feature used throughout many SAP processes to assist with correct account assignment. Few more organizational units in logistics area. Plants, sales organization, human capital management. A plant is a level of logistics used to segregate, plan and manage materials. Plans are linked to company codes in configuration. This link supports the valuation of goods and services in FI. Within CO, product cost controlling is recorded at the plant or material level. Cost object controlling is also managed at plant or material level. Sales organizations. A sales organization is responsible for negotiating the terms of sale and for managing the distribution of goods. The sales organization is connected to company codes in configuration. Sales organizations support FI, accounts receivable processes. SD is within a sales order can act as cost objects to capture the cost and revenue of make to order MTO products and services. So human capital management. In human capital management, HCM, the personal area supports personal administration. Each personal area is connected to a company code. The personal area supports value transactions for payroll and personal management. Within HCM, each person is assigned to a cost center or inherits the assignment through the HCM organizational structure. This component supports the capture of personal expenses. So with this, I am going to end this video, and I hope you all understood the organizational units linked with controlling area and how it is useful to record the actual transactions and all the transactions related to various business processes. And thank you all for watching this video, and we will meet in the next video. Thank you so much.